This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Cold water, European stocks and U.S. futures drop after Fed officials reiterated the need to raise rates higher for longer to quash inflation, while Powell speaks later today. Let the chips fall. Apple considers dropping a key Broadcom part from its devices in favor of its own homegrown semiconductors. Plus, buyout targets. Qatar is said to be looking at Man United, Liverpool, or Tottenham Hotspur for a possible deal after hosting the most expensive World Cup ever. Now, first thing is first, so let's check in on the markets. I know a lot of you will want to know more about this football story, so we also have our sports guru, David Hellier, who broke the story for us, coming on the program a little bit later on. European stocks overall down 0.7%. This is largely also reflected in some of the S&P futures that we're looking at, down 0.2%. We had Raphael Bostic. We also had Mary Daly. Mary Daly, really interesting in terms of what she's expecting interest rates to be. Yes, around 5.2, even 5.5. But the idea is that they could stay higher for longer so that there's no Fed pivot. And again, the market getting used to it and maybe selling off on the back of it. Euro dollar 107.35. Let's also get into the European map to see whether, and I haven't seen so much difference between what's happening, for example, in Europe or in France compared to what's happening in the UK. Down 0.3% for the FTSE 100, the CAC 40 down 0.6%. Now, Fed officials see further rate hikes in store ahead to above 5% before pausing and holding at that level for some time. The Atlanta Fed President Raphael Bostic reiterated the central bank's commitment to tackle inflation, saying they will have to hold their resolve. Well, San Francisco's Mary Daly said it all depends on inflation data.
Starting point is the SEP, putting it between 5.25 and 5.5 if memory serves. That's a reasonable place to start, but we're going to need to go in and imagine as the data roll in, do we need to go higher or can we stop a little earlier? I think something above 5 is absolutely, in my judgment, going to be likely. But when I say absolutely going to be likely, I still have uncertainty bands around that, but that's where I'm putting it right now.
Well, joining us now is Eddie van der Valter, MLive editor. Eddie, what a treat to have you on TV today.
Oh, fantastic. It's so good to be back.
Less busy than usual.
Yeah. I'll tell you what, I feel like the year is really getting going this week. I feel like this is finally it.
This is it. We had two Fed speakers.
Yeah.
I feel like it hasn't really changed in their tone. Look, if we have to get inflation, interest rates are going to get higher for longer, but the market needs a bit of getting used to this.
You know what? Touch wood, touch wood. It feels like 2023 is a good news year a little bit, right? So far, the news that we've had so far has all been good. And don't forget, if the Fed manages to keep rates higher for longer, that is in actual fact good news for the market, because that means they've avoided a recession and they haven't been, forced into a painful period of cuts. And I think that's what people are missing. People are saying, okay, it's all going to be about rates and the Fed's going to have to cut in order to keep the stock market rally going. But if the Fed manages to keep the job market going at the same time as keeping rates high, then that means, the economy is still growing. The economy is robust enough.
Eddie, I mean, this is a lot of juggling. Like, what could go wrong?
Yeah, there is a lot that could go wrong. There was a lot that could go wrong at the end of last year, right? We still have China slowing down potentially on the back of, new COVID waves. Europe looks a lot better this year. We have avoided this worst-case scenario of an energy crisis. But I think particularly the US, I think that is where the real focus is going to be, and whether the economy remains strong enough. Now, that jobs report that we had last week was very good news. The ISM, on the other hand, much more nuanced.
So, Eddie, when you look overall at some of the news, and this was the big Goldman Sachs call also this morning, no longer expecting a recession in Europe.
Yeah.
Does that change some of the calls you're seeing out there?
Yeah, and I think that's why we're seeing the dollar underperforming. I think, Europe, a lot of people had priced a full-blown energy crisis in Europe. It looks like Europe is going to avoid that, right? Energy storage capacity, natural gas storage capacity, well above 80%, and we're deep into the winter. We're not going to run out of gas this year. Are we going to be able to refill for next year? That's a different question. But for the time being, it looks like inflation in Europe is going to come down fast, and you're not at the cost of growth, which is the key factor.
So we have a chart actually tracking what one of the biggest names in equities have said, and this is a 22% correction when it comes to S&P 500. I mean, I know we're looking at some of the bullish drivers. I know you've been trying to look at some of the services data and actually what it means going forward.
The services data, of course, last week from the US was really bad. And you know what? I think we've got to be careful about separating the leading indicators from the concurrent indicators. And the stock market typically is a leading indicator on where the economy is going to be, 6 or 12 months from now, just like an inverted yield curve. So a lot of these indicators are showing us that perhaps we should be in a recession right now. But the jobs market says we are not. So I think we've got to cast a little bit of doubt on those forward-looking indicators, because the nowcast of the economy isn't where they told us we were going to be, and therefore I think it's a lot more optimistic.
Eddie, how much are we focusing on China? So again, there does seem to be a belief in the markets that we're going to see a lot of volatility, but that China this year will be a positive.
Look, there is no doubt that if the world's second largest economy goes back to work and is back in full swing, that is a positive for the world economy. Now, as you say, there's a lot of doubt, new waves. We had that in Europe. We saw quite often that, when you reopen, it's a stop-start process. But a China that is reopening and going into stop-start process is a China that is more active than one that is in complete lockdown. And therefore, I think Chinese demand is strong this year.
All right, Eddie, thank you so much. Great, terrific update from our Eddie van der Veld, our MLive editor. Coming up, Munich Security Conference, of course, the chairman, Christoph Heusgen, on Germany and geopolitics. That interview is next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this year's annual Munich Security Conference is due to get underway next month. In the 12 months since last year's gathering, Russia's invasion of Ukraine is posing defense challenges for Europe's decision makers not seen since World War II. Well, we're now joined by the chairman of the Munich Security Conference. He's Christoph Heusgen. Dr. Heusgen, thank you so much for joining us on Bloomberg. When you look at the last 12 months and exactly what Europe has lived through and the challenges posed by Ukraine and, of course, the war in Ukraine because of Russia, how has Europe done? If you had to give it a report card, what would it say?
I think that Europe passed, certainly, because this was a really a change in German and European history. We haven't seen an attack in the center of Europe like the one we witnessed last year. The Munich Security Conference last year took place just a few days before Russia's invasion. We had President Zelensky in Munich, his last visit outside the country before he went to Washington last month. And he was appealing to Russia, to find a peaceful solution. And the transatlantic community was strong in saying, well, if Putin does as our intelligence services tell us he will do, we will stand together. Putin went ahead. We saw this. And I must say that we were in for a surprise for Putin, because Putin didn't expect first Ukraine to be as resilient as the country was, as the population was, as the president of Ukraine was. But also he met with a lot of resistance from Europe. He thought that we would be scared because of no more gas supply. We would be scared because of inflation. We would be scared because we needed to support Ukraine with lots of billions. And here we stand. A year after, we're standing strong.
But
Putin
Dr.
has
Heusgen,
been defeated.
Well, I
Yes.
mean, defeated, do you think there could be a regime change actually in Russia? Or what does the next 6 to 8 months? Russia has been significantly
Well, we cannot change the system from the outside.
Capability. Right.
Yeah.
So what do you think
No,
will
we
happen?
cannot change the system from the outside. What we have to do is we continue to pressure, we have to continue to sanction, we have to continue to support Ukraine militarily, that they continue to beat the Russians and to reconquer some of their territory, so that the Russians gradually understand that they don't have a future with Putin and turn against him. You know, this has happened before in the history.
Yeah.
Remember what happened to poor President Gorbachev or Khrushchev. They were put aside at a stage where the Russian political elite thought that they don't have a future with it. And this is what we have to hope for. Until now, Putin stands firm because he is dominating the political scene. There is no media freedom, there is no NGOs, there is no opposition, but people feel the effects of Russia's isolation.
Yeah. Of course, what Ukraine needs now is money and weapons. The new Republican House majority has agreed on capping spending, of course. Would that imperil aid to Ukraine?
Well, I think this is what Putin is looking for. Putin is looking for signs of weaknesses in my country, in Germany, in Europe, and of course also in the United States. And so we have to look very carefully what is happening in the United States. But I must tell you, we have had last year and during the course of the years many Republicans at the Munich Security Conference. And they were very strong in their support of Ukraine. So I don't see that there will be a wavering of support. But of course, we have to watch it carefully. And we followed, of course, what was said in the discussions last week, very painful discussions when you see this from the outside.
How long do you think this war will last?
It will last longer than we hoped it would last. Because Putin counts on our weaknesses. He counts on our population to say, well, that's enough. We force Ukraine, we force Zelensky into a ceasefire. And there we have to stand firm and we have to continue to support. And you have seen this week, Francine, you have seen the decision by the Americans, by the French, by the Germans to deliver tanks. And so we stand firm, and Putin will be in for more surprises.
Dr. Heusgen, of course, in conflict zones, and we've never seen such high-tech weaponry and tanks being sent to frankly, almost any part of the world. But in conflict zones, when the conflict ends, there's always a worry of what happens to these weapons. Is now the time to think about that?
Now it's time to support the Ukrainians with weapons. They have been very responsible in conducting the war, in using the weapons. You know, you are probably, as I do, following the news from Ukraine. This country stands together. They stand together in defending their country. They stand together in supporting their military forces. And I think the concern that weapons may get somewhere derailed, I think it's not a concern we should have.
Thank you so much for all of those insights, Christoph Heusgen. They're the chairman of the Munich Security Conference, and of course, that security conference will be mid-February, and Bloomberg will be a big partner in that. Coming up, in a bid to shore up public finances, the UK Chancellor cuts energy aid to companies. We have plenty more on that story next, and this is Bloomberg. In the UK, the Treasury has announced it is cutting energy support to businesses and bringing in a new, smaller program from April. Now, joining us now is Bloomberg's Lizzie Burden in London with the very latest. Lizzie, good morning. So gas prices, of course, have been falling. How bad is this for business?
Yeah, they fell significantly over the summer, but remember, they're still triple the pre-crisis level, so businesses are still struggling with their energy bills. But the government has said yesterday in the House of Commons, it was Treasury Minister James Cartledge, that it's shrinking its energy support. support from 18 billion over 6 months to 5.5 billion pounds over 12 months. And the reaction hasn't been a happy one. The UK Steel lobby group said that UK steel manufacturers are now getting less support than German manufacturers, making them less competitive. And the Federation of Small Businesses has said that businesses are either going to go to the wall or have to cut jobs if the government doesn't cough up more money.
So, Lizzie, are we close to a deal for pay with union workers?
Well, it does seem that both sides are softening day by day. You remember over the weekend, the debate was about whether the Prime Minister would be open to the idea of negotiating on pay for this year. That's what the unions want. Or is it just 2023, 2024? But what we've heard from the big talks yesterday between the government and the union bosses is that the Health Secretary, Steve Barclay, seems to be willing to backdate pay, so kind of meeting in the middle on the time frame. And the Financial Times reports that potentially the government would be open to a one-off payment to help workers deal with the cost of living, something that you tend to see more in the private sector and the Prime Minister's spokesman has ruled out before. So another two options, but still we're expecting ambulance strikes tomorrow, nurse strikes later in the month. And so it seems like both sides want an off-ramp, but for now they're still trying to choreograph a way that both look victorious.
So we wouldn't probably get an agreement for the next 6 weeks, or, I mean, is it just impossible to say?
I'm sure we'd all love to say that the chaos could come to an end, but I do feel optimistic that things are moving. But remember as well, the anti-strike legislation is being brought forward today. So from the union's perspective, it's still a long way to go.
All right, Lizzie, thanks so much. Our Lizzie Burden there with the very latest on some of the things that we're seeing in the UK. Also, in the first sign of progress in a long-running dispute on post-Brexit trading rules, the EU has agreed to use the UK's live database, tracking goods moving from Great Britain to Northern Ireland. Now, for more on all of this, we're joined by Bloomberg's managing editor for European economy and government. He is Ben Sills. Ben, good morning. So what exactly has been agreed?
So basically what this means is that the Europeans are going to be able to have a better idea about the goods that are flowing into Northern Ireland from Great Britain, so that gives them more confidence that the single market, which of course begins at the border between Northern Ireland and the Republic of Ireland, is going to be properly controlled. That's been the technical and political problem for both sides to solve, which is one of the issues at the heart of this dispute over the Northern Ireland Protocol.
So, Ben, how significant is this in the overall scheme of things?
Well, I think that there are still a lot of significant issues to be resolved before the issue can be laid to rest. However, I think it's significant because it shows a return of goodwill. It shows that the two sides can work together. It shows progress for the first time in months, and it shows that the arrival of Rishi Sunak after the brief and turbulent premiership of Liz Truss and the longer and just as turbulent premiership of Boris Johnson, it's like a new page in this relationship, and I think both sides are committed to getting a deal done in the next few months.
So, Ben, what exactly, I mean, the underlying, why is there such goodwill, I guess, on both sides? The Prime Minister, Rishi Sunak, was a Brexiteer right from the start. So is it to try and grow the UK, or do we understand their thinking in this?
I think that Sunak, although he was a Brexiteer from, before either Truss or Johnson, he was more of a kind of technocratic vision on the issue. He's not been using Brexit in quite the same jingoistic fashion that Truss and particularly Johnson did, and I think that the Europeans feel they can do business with him on that basis. Plus also we have the 25th anniversary of the Good Friday Agreement coming up in April, which could possibly mean a visit by Joe Biden to both Dublin and Belfast, and the British want to make sure that there's going to be nothing to disrupt that.
Okay, thank you so much, Ben Sills, their managing editor for government and economy. Now, we'll be also covering all things UK every week on Thursdays, 9:30 a.m. UK time for our half-an-hour special. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A day after Brazil's capital was stormed by his predecessor's supporters, President Lula da Silva says there will not be a coup. He made the comments after holding a meeting with all 27 of the country's governors, including allies of the former president Jair Bolsonaro. The French President Emmanuel Macron is risking upheaval with his plans to overhaul the country's pension system. He's going ahead with an election pledge to raise the minimum retirement age from 62, setting out the plans later today. The move could trigger mass strikes and protests when the French economy is already at risk of falling into a recession. ENGIE has agreed to extend the life of 2 nuclear reactors in Belgium for another 10 years, a move which will help boost Europe's energy security. According to Prime Minister Alexander De Croo, the French utility will begin the permitting process this week. After months of talks with the federal government, Belgium had been planning a full phase-out of atomic energy by the end of 2025. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, going it alone. Apple considers swapping a key chip component from Broadcom for one of its own. We'll have plenty more on that story next, and this is Bloomberg. Cold water, European stocks and U.S. futures drop after Fed officials reiterate the need to raise rates higher for longer to quash inflation, while Powell speaks later today. Let the chips fall. Apple considers dropping a key Broadcom part from its devices in favor of its own homegrown semiconductors. Plus, buyout targets. Qatar is said to be looking at Man U, Liverpool, or Tottenham Hotspur for a possible deal after hosting the most expensive World Cup ever. So, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Fed officials see further rate hikes in store ahead to above 5% before pausing and holding at that level for some time. Now, San Francisco Fed President Mary Daly sees a range between 5.25 and 5.5, adding it all depends on inflation data. Joining us now is Ben Gutteridge, Asset Management Director of Model Portfolio Services at Invesco EMEA. Ben, Happy New Year. I don't know whether you're an investor and look at the new year and kind of say, look, well, I know that we're going to, touch 5% in terms of interest rates. What I want to know now is the timing of how long they stay there for.
Well, Happy New Year to you as well, and enter the year feeling relatively optimistic. Sure, the latest comments from the Federal Reserve have that reassert that hawkish inclination that they have, that higher for longer narrative. That's difficult for markets to perform well in, I think, but it's not about what the policy it's communicating now. It's the action that is taken through the year, and if inflation does moderate, I believe so the communication and policy execution would moderate too, and I think markets would take kindly to that.
So, Ben, let's also look at a chart actually looking at U.S. CPI. Now, the Federal Reserve, I know, is very data dependent, but at what point do they start actually also pricing in what they've done so far? So this is, data dependency, but also modeling.
Well, I mean, this is sort of a key question, and one that markets will be sort of fighting over in terms of market volatility. But you would have thought through the first half of the year, the pause should be clearly on the table, and it would be our anticipation that the Fed, at some stage, perhaps end of Q1, early Q2, will be communicating that a pause is coming on the back of moderating inflation, and whether the cuts come or not is uncertain. But that pause, we think, should be taken reasonably well by markets.
I mean, a lot of people are also talking about this Goldman call this morning, saying they no longer expect Europe to be in a recession. Now, it's debatable whether we're possibly, at the outskirts, really the fringe of recession at the moment. But do you see any value in Europe?
Yes, we certainly do see value in Europe. Certainly the gas price equation is much more favourable. We think the ECB may have to reverse some of its hawkishness as the inflationary trends don't seem to be quite so acute there. Certainly don't see it in the wage market. And then, of course, the China reopening story. Now, I wouldn't get overly excited about that. It's not necessarily that they're going to be like consuming lots of things out of Europe, but you know, a reopening story in China is also a help rather than a hindrance, and therefore there is a better
travel? So what do you buy? Are there sectors that will benefit this almost directly?
Well, I mean, it's more of a domestic recovery story. So it's almost like a China A-share story, more so than perhaps a sort of you know, sucking in lots of imports from around the world. I mean, it's more. There's more imports will come as a result, sure, but the delta we think is more domestic than international. But it's not a bad news story for Europe, and so I probably wouldn't necessarily go as far as the Goldman story. But given the valuation, yeah, I think Europe is interesting.
Value versus growth. Where are we on this in 2023?
Well, I think you know the money to be made is in the value markets, but given the concerns that we have around growth, you know, on a portfolio construction basis, or perhaps being the cowards that I am, we sort of tend to revert to sort of a US equity position. We know it won't give you quite the bang for the buck if this good news story comes through, but given there are still a lot of uncertainties, then perhaps it's a better hedge.
Ben, the UK, I mean, we've had such bad news, frankly, in the UK. Is now the right time to buy in?
Well, it's certainly difficult news domestically. The market has been a relatively strong one compared to other major bourses, and that could well continue if energy markets remain elevated or revert to some price increases. But you know, the UK domestic story does remain challenging, so I would have thought the large caps with that international earnings story, and now some earnings momentum looks like a better trade.
All right, so now let's also talk about tech. Ben, Bloomberg has learned that Microsoft is in talks to invest as much as $10 billion in the company behind AI software ChatGPT. Now, meanwhile, Apple is also considering dropping one of its biggest chip suppliers to use in-house designs. Let's bring in Alex Webb, our Bloomberg Quick Take correspondent who oversees all of our tech coverage. So first of all, Alex, good morning. Apple dumping Broadcom. I mean, how easy is this to do?
Well, clearly not easy, because it's something they've been working on for some time. They have been hiring people to work on essentially wireless communication chips internally. What they buy from Broadcom are the chips that communicate both with Wi-Fi and Bluetooth, noticeably not with mobile network. That's supplied by Qualcomm. So it looks like what they're going to do is ultimately, in a few years' time, Apple will have its own custom chip, probably manufactured under license by someone like TSMC in Taiwan, which can then unite all of those things in one place. The idea being then it would play better perhaps with a lot of Apple's other components.
So Alex, what does it mean for other chip suppliers? Or is this a trend, or do you really have to be one of the most valuable companies in the world to get away with it?
I mean, it's a trend at Apple. And of course, Apple, for these companies...
Because they have the money.
So firstly, look, Apple has a huge amount of capital, which they don't necessarily know what to do with. So sometimes what they do, or a lot of what they're doing, is investing in their own underlying technologies. That is meaningful for the likes of Qualcomm and Broadcom, for whom Apple's about almost a quarter of all revenue. These are sizable chunks of change. If they lose Apple as a supplier, it is one of the biggest players, if not the biggest, in the market, depending on what your market is. What Apple is doing is it has already integrated a long way forward in terms of having its own retail and distribution operations. We've seen over the past decade is integrating back into the supply chain and making it more of its own components.
So, Alex, Microsoft, I mean, this $10 billion investment, which I think it's still mulling. I don't know if it's you know, we understand that it's in talks, but that it hasn't really quite made the plunge. Is this a good deal? I mean, if you look at OpenAI, is this the big revolution going forward?
It certainly looks as though, you know, if you look at the venture capital land, for instance, so much money had been flowing into Web3 and all this sort of thing, and perhaps some had missed AI, which is, you know, it is going to be a massive deal over the course of the next decade. For $10 billion, Microsoft's already the biggest investor in OpenAI. It could look relatively cheap at the price, actually, if you look in the long term. The question is how they use it. Is it going to be something which could make Bing a real challenger to Google search? Is it something which actually is just going to be going into things like chatbots, which they supply to all sorts of companies around the world, you know, for customer service? There are lots of potential applications for this. It's worth saying, you know, ChatGPT, GPT-3, which is based on, is far from perfect. It has a lot of problems. it is also just a beta. So there is going to be further development. This capital will help them do that.
Ben, have your kids asked to go on ChatGPT for their homework?
They haven't yet.
They haven't yet.
No,
I hope they're
no.
not watching. Kids, don't try this at home. Are you an investor in tech?
Well, we are by proxy of being favourable towards US equities. I think, some of these numbers obviously mind-boggling, but the long-term growth potential still looks pretty reasonable as far as we can see. And of course, our anticipation is that the Federal Reserve will move incrementally dovish as we move through the year. What happens over the next sort of month or so is clearly very uncertain. Certainly, they seem committed to being hawkish at the moment. But on a medium-term view, as the rate cycle comes to an end and given the earnings power these businesses have, still favour US equities and tech by proxy.
So tech by proxy, anything, when you look at the sector groups, for example, energy was the biggest winner last year. Does that continue into 2023?
Well, clearly there's some geopolitical risk in that trade. I would have that makes that sort of much harder to predict. I think if we think about a falling rates, a tougher economic position, a fading rates position on the long end of the bond curve, then I think areas like tech and defensive healthcare, those are sort of the areas that would be favouring, but certainly hedging that with some energy given the geopolitical risks.
Alex, I feel like the best part of last year, we're talking about job losses in tech companies. Has it plateaued? Is it going to be reversed, or are we just in a wait-and-see mode?
I think there's a lot of wait and see, I think a lot of companies have pushed job cuts through. There are a lot who haven't, and some of those who haven't are facing pressure from their investors to do so. So I think we'd like to see more. I wonder whether the lion's share for the big companies has already been done. Okay,
is there anything in particular that you're looking out for as really a kind of barometer of what tech companies do?
It is really interesting to see the news flow we're starting to see from the semiconductor companies. As that we saw this massive undersupply early in the pandemic, then we saw, it seems now, oversupply as they ramped up production capability. It is a bellwether for consumer demand in a whole range of different businesses. Samsung, we saw preliminary numbers from them, not very good. The implications then for Apple and others, there is some hesitation around that these companies, which had proved remarkably robust through much of the pandemic, now starting to feel the pain quite a lot.
All right, thank you both for joining us. Alex Webb there, Bloomberg Quick Take correspondent, and Ben Gutteridge, Asset Management Director of Munich Portfolio Services at Invesco EMEA. Coming up, deal doldrums. Jefferies' fourth quarter profit slumps 57%. We discuss earnings and the outlook for Wall Street. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
ENGIE has agreed to extend the life of 2 nuclear reactors in Belgium for another 10 years, a move which will help boost Europe's energy security. According to Prime Minister Alexander De Croo, the French utility will begin the permitting process this week. After months of talks with the federal government, Belgium had been planning a full phase-out of atomic energy by the end of 2025. Now, a third member of Sam Bankman-Fried's inner circle is said to have met with US federal prosecutors seeking a cooperation deal in the fraud case over the collapse of FTX. Any deal with former engineering chief Nishad Singh would leave Bankman-Fried isolated. After the FTX founder pleaded not guilty last week to 8 criminal counts, Singh has not been accused of any wrongdoing. And Bloomberg sources say BHP Group has struck a deal to sell Australian coal to a Chinese firm in the latest sign of easing trade curbs between the two nations. Sources say BHP sold 2 shipments of meteorological coal for loading in late January. China slapped an informal ban on Australian coal in late 2020 as relations did sour. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now let's turn to the banking sector, where the deal slump is hitting the bottom line. Jefferies has reported a 57% decline in in its fourth quarter profit. Nomura, meanwhile, has seen an exodus of senior bankers in Asia. Now, for more on all of this, on the banking outlook, we're joined by Bloomberg's Charlie Wells. Charlie, so good to speak to you as always. So if you look at Jefferies, of course, earnings not great. There another discouraging or bad news from Wall Street. So who's reporting later this week?
Yeah, so later this week, we're going to see some of the bulge bracket banks. So Jefferies is interesting because it's early on in the week of this sort of fortnight of earnings that we're about to see, but we're going to see the likes of Bank of America, of JP Morgan, and they should give us a kind of broader picture of how the U.S. economy and Wall Street is faring. So Jefferies, of course, is primarily focused on investment banking, so we get sort of a segmented view of what's going on, broader picture later this week.
What about Nomura? So we had some senior bankers leave the Asia-Pacific region.
Those departures are striking, and I think they indicate that, there has been trouble in deal making in Asia for a while now. We've seen other major banks have some headcount reductions there as well. I'm talking about Goldman Sachs, I'm thinking Credit Suisse. But of course, the bank points to broader trends in investment banking that have been really hard on the sector. And so that in part explains why these departures may have happened.
So Charlie, overall, and we're seeing, a cutting of the fat, or without, it's job losses, it's basically cost cuts. Is this because the banks grew too much in 2021, 2022?
This is difficult to talk about, right? Because it's real people, it's real job losses, of course. And yes, so there was an expansive growth in deal making over the course of 2020, 2021. We saw a lot of these banks really ramp up hiring. And now, as you say, this is kind of cutting the fat. This is a sense that, in some of these areas that really have kind of boom and bust cycles, including deal making, you scale up when the deals need to get done. Unfortunately, when the deals, start falling through, you have to scale back on the hiring.
But is it mainly back office that's actually, because it's difficult, right, to wrap up people? I don't know whether it's the rainmakers that actually bring the deals in that would
It's challenging, and I think what we're seeing is actually a more broad-based cut to a lot of these banks. What was really striking this week was, of course, the news about Goldman that Bloomberg broke, cutting 3,200 jobs starting this week, and those cuts were a lot broader than a lot of people thought. So this is not as specific as I think maybe people would have hoped.
Okay, Charlie, thanks so much. Charlie Wells there with the very latest on some of the banks. Now, coming up, new ambitions. The Qatar Fund is said to be targeting stakes in England's top Premier League clubs. More on that story next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A day after Brazil's capital was stormed by his predecessor's supporters, President Lula da Silva says there will not be a coup. He made the comments after holding a meeting with all 27 of the country's governor, including allies of the former president Jair Bolsonaro. French President Emmanuel Macron is risking upheaval with his plan to overhaul the country's pension system. He's going ahead with an election pledge to raise the minimum retirement age from 62, setting out the plans later today. The move could trigger mass strikes and protests when the French economy is already at risk of falling into recession. A union representing UK ambulance workers says a strike planned for Wednesday, which is tomorrow, will go ahead, calling a government offer of a pay rise in return for productivity savings an insult. Prime Minister Rishi Sunak's government has been talking with union leaders across sectors, including health, transport and education, in an effort to stop a wave of strike action. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, just weeks after the end of the 2022 World Cup, the sports arm of Qatar's Sovereign Wealth Fund is setting its sights on the English Premier League. Now, the fund is said to be looking at 3 clubs to buy a stake in, including Man United and Liverpool. Well, joining us now is our UK business reporter. He's our football expert, David Hellier. So, David, thank you so much for joining us. First of all, why are Premier Leagues so much in fashion?
I mean, the Premier League is just the league in Europe. The league
gold
in the world,
standard.
The gold standard. Yeah, and I mean, I think possibly post-COVID as well, where, you know, I mean, all of football suffered during COVID.
Yeah.
But in bad times, you know, there's a sort of flight to quality.
Yeah. But so, David, the Chelsea sale, which you covered extensively, and I keep on saying you're a Chelsea fan. I'm not sure whether that's quite correct, but the amount of money they got for that club, it has changed everything, actually. So are sellers expecting so much more from their clubs now?
Yeah, definitely. I mean, people, you know, club owners who have been with a club for maybe 20 years, like the Glazers, have seen an incredible capital gain, and so they see an opportunity.
So not many people have that kind of money. Does it have to automatically? I mean, is it the Americans that have the money, the billionaires, and then the Qataris?
Yeah. I think you've got sort of two channels really. You've got incredible interest from America, because in American sports, clubs, franchises like Manchester United, they sell at 10 times revenue. Oh. In Europe, it's about 5 times the revenue at the top. I mean, you know, there are people, American investors buying clubs at 1 to 2 times revenue. Oh. Then you've got the Middle East money flows, and of course their interest was massively heightened during the World Cup, with Saudi Arabia doing so well, you know, hosted by the Qataris.
But so, and this is something that actually confused me, because I guess there are investment groups that want to buy more than one club, but there are rules also around it.
Yeah, I mean, at the moment that you can buy as many clubs as you like, except that there's 2 specific issues. You can't have 2 clubs in the Premier League. Right. But, you know, in the case of PSG, they're in the French league, and Man United would be in the Premier League, so there's no problem there. But the other money spinner for the clubs is the European Champions League. Yeah. So in the European Champions League, essentially you can't own two clubs or control 2 clubs. But there's an exception to this. In 2018, Red Bull Salzburg played Red Bull Leipzig, and all the people I talked to say that set a precedent.
So, David, I mean, how 2023, is this really going to be the year where we're going to see a lot of these big clubs change hands?
I mean, I think so. It looks like it. I think Liverpool and Man United are very serious. Everton is up for sale, and the multi-club bandwagon is really advancing. So that's not just in England, but throughout Europe.
Okay, it's January. What football shirt are we getting? Is there a cool football shirt that we should be getting for 2023? It's like the height of speculation of who will buy it.
Football shirt?
Yeah, should we get Chelsea? There you go.
Well, I love Chelsea, but I'd say also Venezia always come out with great shirts.
I know, they're voted #1. I mean, I didn't even know they had a football team, and that's on me, but there's not much terrain, because there's a lot of water. David Haley there, the very latest, of course, on football. Now, Bloomberg Surveillance Early Edition continues in the next hour. In the meantime, we're seeing a bit of pressure across equities. This is on the back of some pretty hawkish comments from Mary Daly, but also from Raphael Bostic. We look at Jay Powell. He'll give a speech a little bit later today. And then, of course, on Thursday, it's the big one. It's U.S. CPI. This is Bloomberg.
I think something above 5 is absolutely, in my judgment, going to be likely. But when I say absolutely going to be likely, I still have uncertainty bands around that.
I don't think we're in a situation where taking rates to 5 or 5.25 will destroy the year. Compared to how much was hiked last year, these are small moves.
The Fed is actually not data dependent here. They're path dependent. That is not a setup for a soft landing, in my judgment.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. The Federal Reserve's next move. Two Fed officials see interest rates rising above 5% as the central bank fights inflation. Summit in Mexico City. The leaders of the US, Canada and Mexico meet to discuss everything from trade to migration to climate change. And Jefferies is the latest to fall victim to Wall Street's deal slump. The firm's profits plunge in the fourth quarter. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Kaylee Lines is on assignment today. And Matt, we're dealing with another day where Fed commentary has poured cold water on risk appetite, it seems. And we wait to hear from Jerome Powell later today.
Yeah, absolutely. I mean, we're looking forward to Powell's statements, but what we've heard so far has made the markets a little bit less bullish. And as a result, we see drops really around the world in risk assets. Take a look at what's going on in Asia. The MSCI Asia Pacific is down, but only by 0.05%. So not huge drops there. The Hang Seng off about 0.3%. And Japanese stocks actually gaining about 0.8% overnight. Of course, the BOJ is in a slightly different situation than other central banks. The yen right now costs $1 for 131, almost 132 yen. So that's pretty stable compared to what we saw yesterday. It's when you get into U.S. stocks that you see futures weighed down a little bit heavier than what we saw in Asia. Well, actually, now that I say that, futures are unchanged on the S&P. So not too bad. It looks like a little bit of a recovery. And I wonder if there are people out there who were surprised by what Raphael Bostic said. I mean, of course, the Fed is expected to raise rates more than 25 basis points at the February meeting, according to market pricing right now. So that would point to a 50 basis point hike. That puts us at 5% already. And that means we only need one more hike to get above that. The U.S. 10-year yield at 354.85 right now, so up about 2 basis points as investors feel comfortable enough to sell that debt. Maybe that's why you see futures going back to unchanged. Gold right now, very little changed, also only up about 0.25%. 1876 a troy ounce is the level there. I chose gold because there's even less movement in crude, or at least there was about 10 minutes ago. And then Bitcoin holding for a second day in a row over 17,000, $17,247. So it looks like it may break out of the $16,000 range to the upside if this level holds or moves higher. Anna, what do you see in Europe?
Yeah, when do we call that a comeback? Let's have a look at what we see on Europe then. And this is the picture across European equity markets. Down around 0.25% on the FTSE. More than that, 0.5% weaker on the DAX and the CAC. Off earlier lows, though, for European stocks, just in keeping, Matt, with what you were saying there about US futures. And it has been the hawkish commentary from Fed officials that seems to have weighed at the margin, at least, on sentiment. But other assets seem a little more confused. Commodities, FX, more difficult to pick out an obvious trend there, even if we are a little bit risk-off when it comes to stocks. Although Europe playing catch-up with the US of yesterday a little bit there. To Matt's point about crude not moving very far, certainly that is the case with Brent. 79.68. Worth reminding ourselves how far we've come, though, from those levels of 120 back in the summer of last year as we continue to watch that China reopening story. The euro at 107.40. Again, not on the move all that much, but I put this in because, of course, we're focused on the growth story out of Europe and the way that the Eurozone in particular navigates through the winter and the energy challenges. The same applies to the UK to some degree, but interesting to see that Goldman Sachs coming out with a revision upwards to their estimates for growth in the Eurozone for the year 2023. And they've gone from suggesting we'd see a contraction of 0.1% to growth of 0.6%, which in economic circles is a pretty big deal, a pretty big move. So worth noting that the euro at 107.41, the pound at 121.77. Some slightly gloomy news for a few months in a row when it comes to the recruitment sector. That seems to be the dominant headline in terms of the UK macro today. We've got strike activity ongoing. We'll get an update on that later. Euronav is a stock listed in Brussels, down by 17.6% today, Matt. This is a shipping business, of course, a maritime business. They had been the subject of a bid from Frontline, which is owned by a billionaire. And now that Frontline offer is not going to happen because one of the shareholding families in Euronav, they own about 25% of the business, has raised objections.
All right, we'll continue to watch what's going on with that. Right now, I want to get back to the big Fed story. Two officials from the central bank say that the Fed probably needs to raise benchmark rates above 5% before pausing. and holding for some time, for a long time, according to Atlanta Fed President Raphael Bostic. He reiterated the central bank's commitment to tackle inflation, saying they will have to hold their resolve. And San Francisco's Mary Daly said it all depends on inflation data.
Starting point is the SEP, putting it between 5.25 and 5.5 if memory serves. That's a reasonable place to start, but we're going to need to go in and imagine as the data roll in, do we need to go higher or can we stop a little earlier? I think something above 5 is absolutely, in my judgment, going to be likely. But when I say absolutely going to be likely, I still have uncertainty bands around that, but that's where I'm putting it right now.
Bloomberg's Danny Berger joins us now for more. So, Danny, what should we expect the fallout from this to look like in markets and then from Powell later on?
There's not a huge amount of fallout at the moment when it comes to the market movement, Matt. Yes, there's potentially a little bit of tightening. You do have some higher pricing on rate hikes, but still the terminal rate, this market is pricing below 5%. And after June, you still have that pricing where we have cuts, despite the fact we continue to hear from Fed speakers, again, Daly there, Bostic, saying that it's going to be 5% or more. We're likely to hear that from Powell as well. But there's just a fundamental disagreement, it seems like, happening in markets and Fed speakers. Fed speakers, Powell, really focused on wage growth. They want wage growth to come down to a level that's commensurate with 2% inflation. But it seems like the market is buying this narrative of immaculate disinflation. You can see it in the dollar, for example. For our radio listeners, I do have a chart that does show a drop in a dollar at a 7-month low. This is sort of the belief that you don't need a huge uptick in unemployment or even potentially wage growth, a fall in that, to bring down inflation. But again, the Fed continues to be focused on it, so it's likely that this disagreement could continue for some time, even if we do get CPI this week that comes in slightly lower.
Yeah, and for every time we hear Fed officials focus on the labour market, we hear market participants talk about how it's lagging data, and we go round and round. Danny, thank you very much. Bloomberg's Danny Berger with the latest on the Fed. We'll wait for Jerome Powell to speak a little bit later on today. He's at a symposium in Sweden. Now, President Biden met with Mexico's president yesterday at the North American Leaders Summit in Mexico City. According to a readout from the White House, the two discussed migration issues and drug trafficking and reiterated their support for democracy in Brazil. Joining us now with more is Bill Farries, a Bloomberg editor who has extensive experience covering U.S. national security matters. What stood out to you then, Bill?
Well, you know, from the U.S. side, the focus is really on the border. The Democrats have been seen as weak in terms of, or having vulnerabilities in terms of immigration policy and the flow of fentanyl over the border. So those are a couple of the top priorities that the Biden administration wants to discuss. On the Mexican side, those are issues, but they also would love to talk a little bit more about investment and trade. Mexico would really like to benefit from this idea of friendshoring, getting companies with operations in China to maybe relocate some of their manufacturing centers to places like Mexico. But trade is not really one of the highest priority issues for the Biden administration. It's thinking much more squarely about how to deal with this influx of migration at the southern border.
Yeah, that seems to be really the focus, Bill, and it makes me kind of wonder what Justin Trudeau is going to do. Does he just hang out and drink while the other guys talk? I mean, it doesn't seem like Canada really has much to bring to the table at this meeting.
Well, the U.S. and Canada do have a shared interest in trying to find ways to expedite crossings at the northern border. That's been an issue with some delays in the electronic system used to help expedite people through border crossings and airports. So that's something that the Canadian government has signaled it really wants to make progress on with the U.S. But I think from the U.S. side, that high priority is how to deal with this vulnerability at the southern border that I think they feel politically vulnerable on heading into 2024.
Bill, thank you very much. Bloomberg's Bill Farries with the latest on that meeting of the three leaders. Let's turn our attention now to the banking sector, where the deal slump is hitting the bottom line. We're joined now by Bloomberg's Charlie Wells with details of what we've heard from Jefferies. Jefferies reporting a 57% decline in its fourth quarter profit. Charlie, good morning to you. So what is behind this?
So that's a serious slump. And when you look into the numbers, you really see that it's investment banking deal flow that has really hurt Jefferies. Of course, Jefferies is a pure play investment bank. They saw investment banking revenue revenue down in the fourth quarter 52%. But it's a more nuanced story here, and I think it's one we're going to hear more about as more banks report over the course of the week, because those numbers actually beat estimates, right? So estimates were at $550 million for revenue. They actually got to nearly $570 million. And the bank was quick to point out that they had their second best full year investment banking revenue ever. So it's complicated because we're comparing to a bumper season for earnings in the past few years, but actually investment banking revenue hit levels above 2019.
Will earnings be similarly negative as larger Wall Street banks report later on? I think on Friday we're due to get a slew of Wall Street banks.
Yeah, Matt, the bulge brackets are coming through. And I would say Jefferies is sort of like a pigeon in a coal mine, not necessarily a canary, because it's not the best indicator that we have going forward, but it gives us some sense of how investment banking revenue will probably stack out at some of these larger banks. But of course, these larger banks offer different products. They will give us an indication of, how mortgage revenues are coming. They'll give us an indication of how, net interest income is going to play out. And more broadly, how the American consumer seems to have fared in that fourth quarter. Which could give us a better sense of where the economy is heading. And the really big indicator that I'm looking for in these big banks is their bad loan provisions. That will give us a sense of how bad some of these larger banks think the economy could be going forward.
All right, Charlie, thanks so much for joining us. Bloomberg's Charlie Wells talking to us about the Jefferies results and then what to expect coming out on the 13th. Again, on Friday, we have a slew of bulge bracket banks reporting to kick off Q4. Now, let's take a look at some of the stocks moving in the pre-market trading today. Apple is pushing to replace the chips inside its devices with homegrown components. That's been an ongoing trend for the company. It means dropping components from other companies. Broadcom is one that we're talking about today. A key Broadcom chip will be swapped out. Also swapping out electronics from Qualcomm in 2025. So these are two on the list after Apple has already replaced largely most of its Intel products. It is Broadcom. Apple is Broadcom's largest customer. It accounted for 20% of the chip maker's revenue in the last fiscal year, and investors could worry about that going forward. You can see Qualcomm, though, the only one really moving in the pre-market. Microsoft is in talks to invest $10 billion in the owner of AI service ChatGPT. That's according to Semaphore. It's part of a funding round that could value OpenAI at about $29 billion. And CVS is said to be exploring an acquisition of Oak Street Health, which runs primary care centers for Medicare recipients. A deal could be reached within weeks that would value Oak Street at more than $10 billion. You can see those two, certainly Oak Street moving very dramatically in the pre-market, up 35%. Anna?
Yes, certainly dramatic moves there. Coming up on the programme, we'll talk about dramatic moves in FX markets. Valentin Marinov joins us, Credit Agricole's head of G10 FX research and strategy. And top central bankers are attending an international symposium at the Riksbank in Stockholm. That event currently taking place. Among the speakers today, Governor Andrew Bailey of the Bank of England, the BOJ's Kuroda, both of those on stage right now, along with Isabel Schnabel of the ECB. You see her speaking there. They're all in a panel together. Later on, we'll be hearing from Fed Chair Jerome Powell. We'll continue to monitor the event and bring you any headlines. This is Bloomberg.
To our primary objective of price stability. As we and other central banks worldwide have started to raise interest rates, we have faced fierce criticism regarding our role in fighting climate change. There is a concern that high
Welcome back to Bloomberg Surveillance, the early edition. We are simulcast on both radio and television, and we're looking at European stocks that have started to outperform pretty significantly U.S. stocks. We're indeed seeing that happen for the first time in many years, and it's coming to a point where it's starting to mean something statistically. What? I'm not 100% sure because Daniel Curtis put this chart in log, and I don't really get it. I could pretend, but let's be honest. Joining us now is Ksenia Galuchko, Bloomberg Equities editor, to tell us why this is happening. Certainly, we've only had a few trading sessions this year, Ksenia, but if you just look in normal percentage terms, Europe has outperformed the U.S. so far.
Absolutely, Matt. Yes, it's been a stunning outperformance. So since the very end of September, Europe has outperformed the US by a lot. And it's not just in local terms, but also in dollar terms. And the main reason here is China's reopening and also the abundance of value stocks in the European market. The US is primarily suffering from the huge impact of mega cap tech stocks really weighing on the S&P 500 performance here. If you strip out the tech, the S&P would be performing the same way Europe has.
Ksenia, good to see you this morning. So there are clearly lots of reasons why a lot of investors are getting excited about European stocks. China reopening is one of those, and a lack of exposure to those vulnerable tech stocks perhaps also. But when you talk to macro strategists, a lot of them talk about how the ECB is going to hike more this year than the Fed. And I wonder how much of a headwind that could turn out to be. We're just hearing from Isabel Schnabel of the ECB. She's saying policy must turn restrictive to fight inflation. Inflation will not subside by itself. So keeping up the hawkish narrative, and yet we're still supposed to see the upside for European stocks.
Absolutely. That's the really interesting dilemma here. So this morning, Goldman Sachs economists came out and said that they're no longer expecting a recession in Europe this year. Earlier, they were expecting a small contraction. And this is mainly on China reopening coming in sooner than expected, and also gas prices coming in lower. So the energy crisis is not expected to be as strong. Again, this means that ECB is likely to continue hiking higher, and Goldman economists confirm that. But at the same time, just like I said, the abundance of value and cyclical stocks and lower valuations in Europe are likely to continue driving the outperformance in European equities.
Do we continue to see outperformance in European equities that are so reliant on energy companies if this winter stays warm?
Well, it's not just energy companies. If you look at the sectors that have been outperforming the most since the end of September, it's actually banks and consumer companies. So luxury it has been doing great. And as you know, luxury companies are some of the biggest in Europe. Take LVMH, Kering, some of the biggest outperformance on this China reopening. At the same time, yes, energy and commodities have actually been lagging behind this year as gas prices, oil prices are starting to subside. And banks, of course, benefit from those rate hikes that are expected from the ECB and the Fed.
And over to US stocks then, Ksenia. I mean, Morgan Stanley's Wilson is saying don't buy US stocks in this any latest bounce. He says that we could see a 22% slump from current levels. Goldman's Costin also seeing the 2023 earnings story as showing estimates are too high. This doesn't bode well stateside, I guess.
Well, so I was looking at the Citi Earnings Revisions Index the other day, and actually the deepest cuts right now compared to Europe, compared to the world, are for the US market. So I think analysts are going into this season very pessimistic, and that way the earnings can actually outperform their expectations. That often happens. So currently the rate of those earnings cuts in the Citi Revisions Index is the deepest since early 2020, since the peak of the pandemic.
That's really interesting. Yes, so a bit of catch-up maybe a bit happening there in terms of estimates from US analysts. Ksenia, thank you very much. Bloomberg's Ksenia Galuchko with the latest on the markets. And you can get more market analysis. MLIV Go is the function to use on your Bloomberg terminal if you want to read the Markets Live blog. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York, and Anna Edwards is with us out of London. Kaylee Lyons is on assignment this week. Now, keeping you up to date with news from around the world, here's the first word. After years of drought, California is in a long flood fight. Since the end of December, waves of storms have rolled in off the Pacific Ocean. They've killed at least 14 people, closed highways, and forced residents to flee. On Monday, there was an evacuation order for the town of Montecito, home to Oprah Winfrey, Prince Harry, and Ellen DeGeneres. The UK's attempt to send the first satellites into orbit from its own soil has failed. A rocket launched from a Virgin Orbit Boeing 747 that took off from England suffered a malfunction. That led to the loss of its payload of 9 satellites. The jumbo jet and its crew, though, returned safely. In college football, Georgia has won its second national championship in a row. The Bulldogs destroyed TCU 65-7 in a game that was more or less over before halftime, maybe even before the coin toss. Georgia quarterback Stetson Bennett threw for 2 touchdowns and ran for 2 others. And the former engineering chief of FTX is the latest member of Sam Bankman-Fried's inner circle to seek a cooperation deal with prosecutors. Bloomberg has learned that Nishad Singh met with federal attorneys last week. A Singh cooperation deal would leave Bankman-Fried increasingly isolated because two former FTX executives are already working with prosecutors on their own deals. So it looks like everyone's coming in looking for a little safe harbor, Anna, and it leaves Sam Bankman-Fried out in the cold with his not guilty pleas.
Right, there's certainly a story that we'll continue to watch as we work our way towards the autumn, towards the fall, where we maybe get more on that. And catch Bloomberg Crypto today at 1 p.m. New York time, 6 p.m. in London with Matt. That's our weekly show that covers the people, transactions and technology shaping the world of decentralized finance. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Federal Reserve's next move. Two Fed officials see interest rates rising above 5% as the central bank fights inflation. Summit in Mexico City. The leaders of the US, Canada and Mexico meet to discuss everything from trade to migration and climate change. And Jefferies is the latest to fall victim to Wall Street's deal slump. The firm's profits plunge in the fourth quarter. I'm Anna Edwards in London with Matt Miller in New York. Kaylee Lines is on assignment today. And Matt, a sense that perhaps the markets are waiting after we've heard from some hawkish Fed officials already in the past 48 hours or so, waiting to hear from Powell and then crucially waiting for the inflation print later on this week.
Yeah, for sure. We're all waiting for that. The question is, will we continue to see the kind of pickup in volume that we saw yesterday? Big jump in volume yesterday. Will that continue today, or will traders sit on their hands? Take a look at what's going on in, well, what's not going on in U.S. markets. S&P futures, you know what? Go ahead and go back to bed. Nothing changing here, and the U.S. 10-year yield also isn't moving very much. 355 is the level there. At least we have a little bit of move in crude, in gold, in Bitcoin. So some of the commodities and or currencies, depending on your view, are changing price. NYMEX crude, WTI up to almost $75 a barrel at 74.92, a little bit less than 0.5% of a gain there. And Bitcoin, I think more interestingly, holding above $17,000. It's been stuck at $16,000 and change for so long, and now it seems to be breaking out of that range. I say it seems to be because we've seen it give us a couple of head fakes above 17 and then drop back down. But right now, $17,265, and that's the second day in a row. In terms of pre-market movers, there's a lot more action in single stock stories. Apple, for example, pushing to replace the chips inside its devices with homegrown components. This has been a long-running story for Apple, but Broadcom is the next in line to get hit. So pay attention to Broadcom as well as Qualcomm in today's trading. Apple itself isn't moving much at $130.14 in the pre-market. Microsoft is up about 0.2% at $227.60. It's in talks to invest $10 billion in the owner of AI service ChatGPT. And then CVS is looking to buy Oak Street Health or exploring that option of an acquisition of Oak Street Health, which runs Medicare centers for $10 billion as well. And as a result, Oak Street Health is up 33%. Anna, what do you see in European markets?
Yeah, we see a little bit more movement here in Europe, but we're kind of playing catch up with yesterday. Here in Europe yesterday, we had a decent session, whereas US stocks faded and ended the day a little more mixed. So we're catching up with that, really. Stocks Europe 600 down by 0.6%. We've had some quite hawkish commentary, of course, overnight from Fed officials, and that reminding us of their likelihood of getting rates above the 5% level. Brent crude, just checking in with that. Not much movement there on Brent either. So even though we're sort of risk off in stocks, we're kind of playing catch up, and FX and commodities markets doing their own thing, really. 79.81 is where we trade on the Brent price, well down from the 120s level that we saw last summer, despite the fact that we're all talking about China reopening. It's a complicated relationship, it seems, there between that story and what happens on various commodities. The euro is at 107.37, pretty flat there as well. I mentioned last half hour that we were following this Goldman Sachs story. They've revised their growth estimates for the Eurozone for this year, for 2023. So they don't see a contraction there anymore. They don't see recession. They don't see a drop of 0.1% in GDP. Now they see see growth of 0.6%, which is quite a sizable upgrade, just underlining the vulnerability, I suppose, of the economy, or the gearing of the economy to energy prices in that upgrade there. Euronav is down by 16.5%. This is a shipping business. The billionaire, John Fredrickson, had been making an offer for this through his business Frontline, another shipping business. Euronav's shareholders, though, not keen. It seems at least one large family, a historic family that has a 25% stake in this business. They are not keen, and so as a result, that deal is going away. The stock is down by more than 16%, Matt. But overall, a little bit risk off in stocks, but a more complex picture in FX.
Right. It makes sense, risk off in stocks. Because of what we heard from the Fed, really confirmation in my mind that they want to hike to 5% or above and hold. Let's see how it is moving the FX world. Joining us now, Valentin Marinov, head of G10 FX research and strategy at Credit Agricole. So, Valentin, we've got a couple more Fed speakers out saying, look, rates are going to have to rise to 5% or higher, past 5%. And Raphael Bostic said, look, we're going to have to hold for a long time. It's not going to be this turnaround and pivot that the markets seem to keep pushing for. Is that moving anything in the FX world?
Well, certainly the markets are ignoring the hawkish rhetoric, and that is not helping the dollar. I mean, if you look at the rate differentials, a key FX driver, what this is resulting into is really a rate convergence, really with currencies like the euro, other like Aussie, really catching up with the dollar. Us investors seem to be playing a theme where other central banks will be catching up with the Fed having peaked. I think ignoring the Fed really, or indeed its hawkish rhetoric, is an inherently risky strategy. Last week, the December Fed minutes have warned that seemingly dovish interpretation by the markets is actually resulting in unwarranted easing of the financial conditions, and actually could mean that the Fed will have to do even more. So from that point of view, I think the markets are trying to call the Fed's hawkish bluff, but that may backfire spectacularly.
Okay, good morning to you, Valentin. So do you see some of this dollar weakness then as a little premature? Because looking at your notes, you do see dollar weakness as one of the big FX themes of 2023, but what, it's too early?
Yeah, indeed. I mean, the speed of the adjustment has been quite aggressive, and I think that at least some of that will reverse in the near term, especially if the Fed now doubles down and tries to push aggressively against the dovish market interpretation. So really, just calling the Fed's hawkish bluff could end up in tears, I think, for some investors. So from that point of view, if you think of a situation where the Fed continues to push rates higher towards 5.25, potentially higher, and as a result, Treasury yields resume their rebound higher, and that coincides with further weakness in the US, European data from here, that is a recipe for risk aversion. That is a recipe for more or renewed dollar demand. The high-yielding safe haven could be back.
Okay, and where does that leave the euro versus the dollar, either in the short term or further into 2023? We've heard from Isabel Schnabel at the ECB. She's speaking at a conference along with lots of other central bankers in Stockholm today, saying that policy must turn restrictive to fight inflation. So ongoing, hawkish sentiments coming through?
It's a matter of credibility, how credible the central bank's message is, right? So for a long period, like last year, the Fed's message was clearly seen as much more credible than that of the ECB. The fact that we're having a mild winter in Europe and China reopening playing a role, that is lending credibility to the hawkish ECB message. However, there is a problem with that in the sense that we are still to see the massive tightening in the European financial conditions that's going to result on that. If you just do the math and think of how much of the debt that the governments in the Eurozone are planning to issue this year, right, in how much of that the ECB will no longer be buying, and essentially the private investors will have to absorb that flow, means that yields for EGB yields like Bund or essentially BTP yields will have to go higher and higher and higher. And we are still to see that tightening in the European financial conditions, which could hurt growth, could actually mean that a mild recession will be very difficult to avoid. And as a result, the credibility of the ECB's hawkishness could be eroded once again. So in relative terms, I think euro-dollar peaking close to current levels. So near term, we think that the return towards 105 or potentially lower could be on the cards.
So you see a higher rates environment for Europe. You see that as necessary to persuade investors to take on the government debt that's going to be issued. How does that stand up against, for example, Goldman Sachs this morning upgrading their estimate for Eurozone growth from minus 0.1% contraction up to plus 0.6%.
Well, we are still in the camp of a mild recession. We do believe that there's going to be a significant consumer retrenchment, as in domestic demand really suffering under pressure. Still persistent stagflation headwinds. I mean, commodity prices, energy prices have come off a bit, but they're historically very elevated. And energy prices in Europe are likely to remain multiples of what they are in the US and in Asia. There's a huge blow to the European competitiveness. So even if China is reopening, chances are that the profits that those exporters will be generating will be far less than what we've seen in the past. So the euro buying, as they convert those profits back into the euro, those flows will be far less really in historic comparison. On the top of that, tighter financial conditions could hurt the lending channel in the Eurozone. The banks' lending will be impacted. So as a result, I mean, struggling to see Europe avoiding recession at this stage.
What do you think about the BOJ here, Valentin? I mean, we've seen some real movement in the yen. Obviously, there's movement in the dollar. That pair has gone from, I think, 147 to 130. Do we get more movement from the BOJ exacerbating that move?
Well, I guess that's one of the crosses that did get us by surprise. We were expecting some depreciation of dollar yen, but essentially where we are at the moment is very much our year-end target. So just the joy of really forecasting the FX markets in full display there. In terms of what's driving it on the dollar side, I think I mentioned that, but on the BOJ, I think the investors are jumping the gun a bit prematurely. Yes, we did see the widening of the yield curve control band in December, somewhat earlier than we were expecting, but we doubt that the BOJ will be abandoning its yield curve control policy anytime soon. So from that point of view, we think that dovish disappointments could be on the cards at the upcoming few meetings. And again, going back to the point about the credibility of the hawkish rhetoric that's coming from the different central banks, or the less dovish rhetoric that's coming from the BOJ, I think that investors may be too aggressive, assuming that the BOJ will be easing out of yield curve control anytime soon. As a result, dollar yen, interesting buying opportunity at current levels.
We just saw pictures, by the way, of Kuroda speaking at a Riksbank conference in Stockholm. He's talking about very big picture stuff. He's talking about the impact that climate change could have on prices and on growth, saying that they can't respond unconditionally. But again, that's huge picture. And we want to know more, Valentin, about yield curve control, don't we?
Well, indeed, that's been one of the key really factors that has been driving dollar yen, the expectation that the BOJ will no longer find that policy useful. However, we think that with the 10-year JGB yields having already adjusted a bit, and that distortion that was so apparent in the JGB yield curve having corrected at least to an extent, makes us think that essentially any complete abandonment or removal of that policy won't be necessary this year. And I should also mention that in terms of valuations, essentially dollar yen is very much where it should be, given the levels for treasury yields, JGB yields. However, we do believe that the markets are underestimating the hawkish resolve of the Fed. So as a result, we actually would expect treasury yields to resume their rise before too long, which makes us actually bullish dollar yen from current levels.
OK, bullish dollar yen from where we stand right now, 131.98. Valentin, thank you very much. Thanks for joining us. Valentin Marinov of Credit Agricole with his thoughts on FX markets. Coming up, we will turn to American politics in the broadest sense. We're live in Mexico City, where the leaders from the US, Canada and Mexico are gathering. More on what to expect next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with former IMF chief economist Olivier Blanchard. That taking place at 8:30 a.m. New York time. This is Bloomberg.
All options are open. I mean, this is why we have, CUSMA in Canada, USMCA in US, and TMAC here. I mean, it's an agreement that also provides for mechanisms for dispute.
The Canadian Trade Minister there speaking with Bloomberg's Anne-Marie Hordern about energy policy at the North American Leaders Summit in Mexico City. Anne-Marie joins us now for more on the summit. And AMH, it's likely to be, our focus is likely to be more on what the U.S. and Mexico have to say than Canada, right? Because it's all about the border this time, isn't it?
Yeah, when Justin Trudeau joins the bilateral today, a lot of the discussions will be about trade, but you're absolutely right, Matt. And yesterday, a bit of a contentious meeting at times, you can say, even though they've really done their part to try to show a warm relationship between AMLO, the Mexican president, how he's colloquially known, and President Biden, picking up at the airport, driving with him to his hotel, a big hug and embrace before the bilat. But there's some difficult issues when it comes to migration, although they just struck a new deal, which would mean more migrants being absorbed into Mexico at the border. But really, when it comes to drug smuggling, and you can see a lot of time in the U.S. readout from this bilateral meeting was spent on the drug smuggling, not just the fact that they have this shared security concern about narcotics like fentanyl, but that the U.S. administration really wants to put pressure on Mexico and is working with them to go after the chemicals that lead to the making of fentanyl, go after the laboratories, go after the drug cartels. And for Mexico's part, before this meeting, they could show that they are trying to do that. They got a video of Guzman, El Chapo's son. He's now detained and arrested. But this is something that is a political issue in America for the Biden administration. Fentanyl deaths is the #1 killing of individuals aged 18 to 49 in the United States. Admiral Kirby talked about the fact that at the border they seized 20,000 pounds of fentanyl since August. This is a huge issue across America, and the Biden administration wants to work with Mexico to get it done, to try to stop some as much as they can that illegal crossing on that border.
And the Mexicans, of course, want to take part in the trade conversation with Justin Trudeau that you mentioned is set to happen later. Are they going to help out Biden on the immigration and fentanyl situation, the broader opioid problem, in order to get more of that trade?
Well, I'm not sure they would exactly frame it as that, which sounds very much like a quid pro quo, but this is something AMLO is asking for. He wants the development banks with the U.S. backing to come in and help them create more projects like clean energy. They want to be a hub and expand the nearshoring that is already happening between these two countries. They want to be a place where companies can diversify. They want the components for the semiconductor manufacturing that's happening in the United States now that the U.S. is putting a ton of money in to come from Mexico instead of, say, coming from a factory in China or in Asia. So they view this whole diversification away from Beijing as a real win for them, but they still want more support. But the trade issues are also going to be quite contentious as well, especially when it comes to energy policy. Mexico will say it's their sovereignty, but Canada and the U.S. say what they are doing is nationalist energy policies. It is not in line with the USMCA. And at this moment, and you heard from Mary Ng there, Canada's trade minister, they're in these discussions, but she says all things on the table. So at the end of the day, if this is not wrapped up, we could see tariffs on Mexico from these two countries.
So we could. Anne-Marie, so trade is being talked about. Drug trafficking, you make clear, is a priority. Migration, also a policy priority. But Brazil and events, unrest further south, no doubt in danger of overshadowing this gathering, especially as former President Bolsonaro is actually in the United States.
That's right. He's in Florida, and there was lots of, videos of him going around in the new year, eating at a KFC and at a Publix in Orlando, Florida. Anna, for you in London, it's quite a well-known grocery store like, say, Tesco in the UK. But now he's hospitalized. And this has overshadowed the event a little bit because you had a joint statement, the first one from Trudeau, AMLO, and Biden, was on Brazil and how they condemned the riots in Brasilia. For the Biden administration, they're coming under some pressure from progressives like Representative Joaquin Castro of Texas and Alexandria Ocasio-Cortez of New York to extradite him. They say that he should not be given refuge in Florida. So Bloomberg News reporting, and a great scoop by my colleagues, is talking about the fact that they're behind the scenes. The Biden administration is looking at what potentially are these avenues they could take to maybe either push Bolsonaro and convince him to leave or potentially revoke his visa. A lot of questions are in the air, but this story is not going away.
Okay, currently hospitalised, but I know that Jake Sullivan said that the administration hasn't received any requests as yet from Brazil to extradite the former president. We'll watch that story. Anne-Marie, thank you very much. Bloomberg's Anne-Marie Jourdain reporting there from Mexico City on the meeting of three leaders and the violence that's been taking place in South America. Now, coming up, cutting energy support, what the new plan from the UK government could mean for business. We'll put that in a wider European context as well. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Kaylee Lyons is on assignment. Now let's take a look at what's ahead today. This morning, central bankers Jerome Powell, Andrew Bailey, and Haruhiko Kuroda are among the speakers at the Riksbank Symposium in Sweden. We've already seen some live pictures of Kuroda there. Then at 11:30 Eastern Time, France will announce significant retirement reforms. Unions have already warned about massive protests and strikes against those reforms, so watch out for yellow jackets. Later on, Mexico's president, U.S. President Joe Biden, and Canada's Prime Minister Justin Trudeau continue the North American Leaders Summit in Mexico City. We were just talking to AMH about that, and trade is next up on the agenda with the three amigos. And then, Anna, in the UK, the Treasury is announcing it's going to cut into energy support there.
Yeah, absolutely. So you might remember that the Truss government put in place, as short-lived as it was, some support for households and businesses. Well, now the Treasury under Rishi Sunak has announced it is cutting energy support to businesses and bringing in a new, smaller programme from the month of April. That was widely expected they'd do that, but now we've got the details of what that means for UK businesses. Bloomberg's Lizzie Burden has details here. And Lizzie, the good news is, I guess, that gas prices have been falling. So whoever's paying the bill, whether it's corporates or it's governments, that's going to be better than, say, it was last summer. But they're still relatively high. Yeah, relatively high, triple the pre-crisis level. And as you say, the government is cutting support for businesses on energy. To just put it in comparison, the former package was worth £18 billion over 6 months. This new package is worth £5.5 billion over 12 months. But the Treasury says it's simply unsustainable to permanently shield businesses from the energy shock from the war in Ukraine. You have had a backlash from the business lobby groups. UK Steel has said that competitors in Germany are getting more support from their government, so UK producers are going to be at a disadvantage. And the Federation of Small Businesses says that companies are either going to have to cut jobs or go to the wall unless the government coughs up more cash.
By the way, British nurses and ambulance drivers pushing ahead with more strikes next week after failing to reach talks with the government. What do we know about the possibility of a deal there? I think the world is watching and hoping that your NHS nurses get paid.
Well, I am hoping that the transport workers get paid so I can get on the trains instead of cycling in, Matt. But we have had some softening of the government's stance. Over the weekend, the big question was whether Rishi Sunak would consider negotiating on this year's pay, not just for 2023, 2024. Now there's talk of backdating pay, so perhaps meeting somewhere in the middle. There's also talk about one-off payments to help workers deal with the cost of living crisis now. But the government is still tabling its anti-strike legislation today. You mentioned about France. Ministers have been pointing out to similar legislation in other European countries on minimum service levels. So you can see the example they're trying to follow there.
Lizzie, thanks very much. Bloomberg's Lizzie Burden with the latest on the ongoing strike activity. Negotiations with unions continue and the government. That is it for Early Edition. Surveillance is ahead. Tom, John and Lisa will be taking you through the market moves. They'll also hear from Olivier Blanchard, Senior Fellow at the Peterson Institute of International Economics. This is Bloomberg.